Let me tell you what I've been seeing. In just a few days, there's been a huge change in how the market feels. You probably felt it too, especially if you're on social media and know what's going on in the crypto world. In just a few days, everything changed. That was all it took. After one bankruptcy event and some market turmoil, everyone has a completely different idea of what's going to happen next. This change doesn't make sense though, and I'm going to explain why. In the past few days, there has been a big rise in the number of market experts, crypto media outlets, and social media stars calling for a bear market. From where I'm standing, being negative is the cool thing to do right now. It has without a doubt. How can you tell when being negative isn't in style? People who are negative will say what they think, and they will get slammed in the comments on social media right away. It's not going to happen now. At the moment, being bearish is very common and seen as normal. But here's the thing. We've just been through the worst bull run in the history of cryptocurrencies if these negative views are right. Take a moment to think about that. Think about this. It took less than 2 times as long for Bitcoin to double from its all-time high from the last cycle, which was a few years ago. Just barely, XRP and Ethereum were able to go above their previous all-time highs. For neither of these big assets, there was a price discovery process that made people melt. For the record, this has never happened in the history of crypto. I should make it clear that the SEC lawsuit has a clear reason for the situation with XRP. But if you look at the past, you wouldn't expect this kind of slow growth during a normal boom market. One more thing. We never had the happy Bitcoin season that everyone was hoping for. Where did that go? Besides all of this, many of the signs we've used in the past to tell us when crypto markets have reached their highest point aren't working right anymore if the bears are right. Take the power of the Bitcoin market as an example. That sign didn't break down. It didn't happen. It did go down a little, but it wasn't completely broken down like we usually see. That's not how people normally act. That's not normal at all, and it would be the first time ever in the history of crypto. CoinMarketCap also tracked 30 crypto market cycle top markers, and 30 of them did not show any warning signs. This has never happened before. Please look at this info that I'm about to show you. Now you can see the page with the crypto market cycle top signs. On the right, they show 30 different indicators. All of them have X marks next to them, which means they have not been tripped. It looks like none of these signs work anymore, even though they have worked for every market cycle before. But all of a sudden, they stop working. For good reasons, people. For good reasons? Are you sure about that? Are you sure that opinion is correct? Then there's how people feel on social media. Let's talk about that for a moment. The excessive optimism on social media never reached its peak. It would also be the first time that has ever happened. What we're looking at here is a lot of this time is different, so think about whether this is how you feel right now. There's more though. Bitcoin and other crypto assets are not following the world M2 money supply, which is at an all-time high right now. It's literally at an all-time high right now. Historically, crypto has always followed M2 at this point in the market cycle. This time, however, crypto is going against M2. Thus, that would also be a first. That is a very important sign since global M2 is, in my opinion, the best individual measure for telling you what direction the price is likely to move. This isn't the only thing that shows something. That's not what I say. But that is the only measure I would follow if I had to pick just one. The business cycle is another thing to think about. The best time for crypto has always been at the top of business cycles. If this really is the peak, it would be the first time in history. Because this business cycle is still very far from over. I could keep going on and on about these strange things, but I think you get the point. Believing that the market will go down is now cool. But to be honest, the chart experts I choose to follow don't just follow the wind. That's the reason I follow them. Because of how they've behaved in the past. In fact, the only chart expert I follow who is now sure that it's very likely that we're going to end this bull run and start a bear market. Just one. Obviously, this is the most important thing to you right now if you want your XRP stocks to go on one last face-melting rally. That's what I care about most. Everyone is talking about it for a good reason. I get why. Check out what that sale event did on Friday. Just plain crazy. I can see why people are scared. So let me break down a few things that have happened recently and give you reasons to trust that things will get better. Not because I want the bull market to keep going, though I do. That being said, I'm telling you the truth. I think the bull market will continue. Still, some analysts I follow, both in the crypto and standard finance worlds, think there's a good chance we could see a big drop. This would obviously have an effect on both stocks and crypto. This might happen sooner rather than later as well. I will say, though, that none of the experts I follow think that a drop like that would mean the end of the bull market. Also, just to be clear, pullbacks happen all the time during bull markets. It doesn't make sense to me to say that this time is different. Also, it doesn't make sense to draw broad conclusions from chart trends alone without taking other things into account. If you want to figure out the direction of movement, it doesn't make sense to just look at charts without taking into account the macro environment and all the other things I just described. This method also doesn't take into account the fact that history often repeats itself. People who are put in similar situations over and over again are likely to behave in pretty much the same way each time. That's why words in history rhyme. Because humans share the same DNA, they act in similar ways when they are in similar settings. It's usually not a good idea to bet against that trend. Another thing I want to say is important before I get into specifics about what led to current events. You should look at this if you're not looking at your screen and it's safe to do so, like if you're not driving. This needs to be looked into. From 1942 to now, this is the story of the US bear and bull markets. The data here goes through 2024, which makes it even better because you know that this year has been mostly good, even though there have been some big drops. But take a look at this info. I keep saying that history rhymes with itself because of this. I'll read this to you. It's the same this time. This chart shows how the S&P 500 index has done every day since 1942, through both rising and bear markets in the US. We think that looking at the past of market booms and busts can help you see the benefits of buying for the long term in a new way. The average bull market ran 4.3 years and had a total return of 149.5% over that time. On average, the bear market ran for 11.1 months and lost 31.7% altogether. That means the highs are a lot higher than the lows. People, you're going up over time. That shouldn't come as much of a surprise. On the other hand, the times when prices are rising are much more important. I mean, take a look at this picture. When you can see it this way, it changes everything. All of these blue times are bull markets. It's a bear market in the yellow ones. Since 1942, we've been in a bull market almost all the time. Also, I found some other information that I will quote, going back in time to 1928. Since 1928, 78% of the time we've been in bull markets and 22% of the time we've been in bear markets. There are records from almost 100 years ago, and since 1928, only 22% of that time has been a bear market. Take a moment to think about that. This shows why hodling is a good tactic. Remember that crypto moves in the same way as the stock market. Also, I believe the S&P 500 is a good indicator of what's going on in the stock market. With 500 companies, it's a good sample size in general. Knowing that crypto moves in the same way as the stock market and that will keep going up over time does help. Are you beginning to see why you shouldn't worry about what will happen with XRP? This is why short-term instability doesn't matter if you think about the long-term enough. Even if the bears are right this time, which I don't think is likely, they might be. I'm gonna wait a few years, even if they're right. The market will rise again then. After that, I'll sell for even more than I would have before. That's all there is to it. That's my plan. You are free to do anything. I'm not gonna sell because everyone is scared. That doesn't make sense at all. I'll just keep getting new jobs and buying more crypto assets. Because that's the only thing that makes sense in this case. That's why I wanted to make this point clear. It doesn't make sense to be scared here, so don't be. The hodl way of life does work. Just look at these numbers. You hold over and over again, and in the end, you win. You do everything that needs to be done. Markets go up and down on their own, and you have no control over when they do. So that's why I say you need to accept that as true. That's something you need to accept as an adult. After that, you take charge of the things that you can, which isn't really that much. You can choose to buy, sell, or hold, though.